Thank you. Good morning, everyone, and thank you for joining us today. We're excited to have the second special session of our knowledge sharing program, which shares international experiences beyond Latin America and the Caribbean. With these conversations, we hope to enrich the knowledge sharing program with ideas, projects, and approaches put into practice in other regions of the world. The first international session in May showcased community-led development in Thailand. Today, we'll be talking about the experience of Syntellect in the housing finance sector in India. It's a pleasure for me to welcome our panelists today. Sumedha Naik is the CEO of Syntellect. Sumedha is a globally recognized expert in the areas of affordable housing and financial inclusion. She's also a business enabler and a business executor with more than 20 years of experience helping small businesses and families to succeed in their relationships with commercial banking. She is the founder and CEO of an impactful financial technology company that, through its right profile product, works closely with lenders to accurately underwrite and rationalize risk for customers who are new to banking or new to credit. But I'll let her tell us more about this great product. Welcome, Sumedha.
Thank you, Annie. Thank you so much. It's such a pleasure to be here with all of you on this forum. And on behalf of the entire Syntellect team, I can say that we're really happy to share our journey and what we've learned along the way. So one of our observations has been that given the exponential growth of cities in emerging markets worldwide, almost 40 to 75% of the residents of developing cities now live in squatter settlements. And a large part of this population is from the informal, underserved, customer segment. And while, we understand that, the solution for housing is very multi-layered and has multiple stakeholders, one of the biggest impediments is the lack of access to finance for the unbanked, underbanked customer. And that's exactly what we are trying to achieve with Right Profile. So Right Profile is our flagship product. And our aim is to create a bridge which empowers the lenders to lend to the unbanked, underbanked customer, and at the same time helps the unbanked customer create a persona for herself, which the lender is comfortable to lend to. So before I go into exactly what it is that Right Profile does, I want to just step back and look at the unbanked, underbanked customer, underserved, and speak with all of you and walk you through why this customer segment is so unique and so nuanced. So essentially, we're looking at a customer segment which is so diverse, which is so heterogeneous, and which is so varied and unique in their trade, in their segmentation. And contrary to popular belief, this is not a homogeneous segment at all. Typically, lenders worldwide tend to look at them as one segment, which is really low on data, but that's not the case. These are very different. They have very nuanced income streams. They have income seasonality. Their expense patterns vary. If at all we had to understand one commonality for the underserved customer segment, it would be that they have data which is not in a form which lenders worldwide are used to. So there are no typical documentation, financial statements. There is no digital footprint. That doesn't mean there is no data. It's just not in a format which lenders are used to. The second common thread, I would say, is their aspiration and the zeal for better life. All of them want to give their families the homes and the lifestyle that they strive to be. And they're in all aspects of the economy. They're in trading, they're in services. Some of them are in very small manufacturing, contractual, services as well. And what we've typically seen is that this customer segment is very, they're very high on life skills. 100% of the produce is sold within 95 kilometers of the business area. So the location of the business area is very important. And this is all very critical. And the reason, this is important because this leads us to why existing conventional lending approaches don't work for this customer segment. So let me, narrate my story. I worked with one of the top lenders in India, which is really it's excellent. It's an excellent lender, fantastic processes in housing finance. And when micro entrepreneurs came to me and approached me for a loan, I was unable to lend to them. And I can tell you in absolute confidence, this had nothing to do with them. It had everything to do with me. That's because I was trained by lending to people for the future by looking at the past. And for me, as a lender, the past was demonstrated in banking statements, in documentation history, in credit bureau records, pristine credit bureau records, in income tax returns. So, in the absence of documentation, as a lender, I was perplexed. I didn't know how to lend to them. I didn't know what questions to ask of them. Because I didn't know what questions to ask of them, I couldn't understand their income. And once you don't understand income, there is no way you can right size a loan or come to a loan fitment. And the entire approach was completely driven by me as part of the lender resource then. So my levels of understanding, my levels of training, my empathy, which is why worldwide lenders are struggling because they're looking at a cookie cutter approach and saying that what we did in the past for a customer segment, which is document heavy, which had credit bureau records, which is formal, should be replicated for this customer segment. It just won't work. And what also happens because of that is that you have a very unfair playing field. It's not a level playing field at all. So when we decided, when we thought as a team, we thought about right profile and we thought of conceiving right profile, we had two main challenges that we had to address. The first challenge that we had to address was we had to convert, anecdotal hearsay data about the informal customer segment. Where people say, "Oh, I think the customer behaves in this way," or "I think she has this income stream." So we said, no, we have to move from anecdotal data to actually capturing data in a digital format and data which is data points which are forward looking, which are scalable and quantifiable, and in a controlled environment. So that was challenge one. Challenge two was that we had to ensure that the product we conceived captured the nuances of the informality of this customer segment. And you will hear me saying this word a lot because this was so critical and it's so critical to right profile. And when we mean informality, we again mean their unique trade segments, their unique income patterns, their expense patterns, their demographics, their geolocation, where they live. And we had to then, embed all of this in a product, which was, scalable, which was fueled by technology. So people, the lenders team on the field, when they met people, could actually use it, and powered by advanced analytics and machine learning. And that's really how Right Profile was born. And today, Right Profile is an extremely intelligent, on the field digital underwriter for the underserved customer segment. And these are the four pillars we work on: customer centric. Right at the center of Right Profile is our relentless understanding of the underserved customer. She is central to the product, absolutely central. Everything we do is to understand the customer, understand the nuances, understand the income. We've then bundled this with technology and analytics and an extremely simple, easy to use proprietary user interface. And what we also do is we customize it across geographies and locations. So for example, we just started our entry into the East African market, and we realized there are certain things very unique to Kenya. So we bring in those aspects as well. So you bring in that level of customization. So what is it that Right Profile actually does? So the first thing we do is we look at the underserved customer in complete totality. We say that the customer is a blend. He or she is made up of herself, her demographics, her background, his or her business or employer, and her financials. And Right Profile actually blends those insights into a numeric from a scale of 1 to 10 and assigns a number, a profile to the customer, and converts that into a loan insight. And we look at diverse data sets. So we have a proprietary user interface. We look at data points we can collect from. And the entire approach is very domain driven. It's very expert driven. So the founding team has, for example, my personal background is only mortgages. I always joke that if there's anything I know, it's mortgage, there's nothing else. So we converted all that expertise of 20 years and more into very deep and analytical neural processes and converted that into a framework and scorecards to assess this customer. Once we had done that, we've added a lot of layers of machine learning. So we have computer vision. And an example of that computer vision is one of our observations was that when the micro entrepreneur or the affordable housing customer is met, the team at the central office, which is not always with the sales team which sources the proposal, wants to see where was this individual working, what did the environment look like. So we have a module, for example, called site visit module, where you actually upload photos of the potential customer's place of business, place of residence, and our computer vision reads that itself, just to bring in an amount of unbiased transparency, and just it's available to all for see. So we brought that in. We have very advanced data capabilities. We have a very strong stack at the back end of machine learning, and we made it very flexible. So it's not a standalone product at all. Right Profile is integrated with all legacy systems. It can sit on top of your existing loan origination system. It can be middleware. It's a very flexible workflow that we've brought into place. Just to move on. These are some of the screens, just to give an example again. So let me elaborate again on one of our unique features, which is trade segmentation, which brings us back to the comment on informality. So we spend a lot of time talking to customers in our, in the low income areas in Bombay, what we call slums, and in India. And I remember, my team and I did want to visit one of them, and he was a tailor. And we were talking to him, and he said, I don't like to visit lenders. And that was an insight which was not surprising to me, because I've heard that a lot. The older generation of the underserved customer feels intimidated, and the younger generation feels patronized. So either way, they don't like it. So I said, okay, I understand that, but why don't you like meeting with them? And he said, they just ask all the wrong questions. So I said, okay, I was interesting. I said, why would you say that? He said, well, my bhauji. So in our national language in Hindi, your brother-in-law is called bhauji, and if he's especially your wife's brother, he's treated with a lot of respect. So he said they asked, my brother-in-law the same questions as they asked me, whereas I'm a tailor and he's a dairy farmer. So how can we be asked the same set of questions? Now, this was a couple of years ago, and it was a complete eureka moment for us. And that's when we realized that that's where it's going wrong. And that's a feature we've brought into Right Profile. So we've identified the top 20 trades. And so let me illustrate further. So if I'm a tailor, the questions the lender should be asking of me is, hi, Sumedha, so you're a tailor. Great. Do you stitch for women? Do you stitch for kids? Do you stitch for men? Are you an alteration tailor? Are you a full-fledged tailor? Do you sit on the roadside? Do you have a shop? How many machines do you have? Are they foot operated? Are they automated? Do you have a separate button sewing machine? That's the question I need to be asked. But for example, his brother-in-law, who ran a dairy farm, his set of questions have to be completely different. He has to be asked, great, so you run a dairy farm. How many cows do you have? What's the breed? What's the age? Because that reflects in the output of the milk. How many calves do you have? A completely different set of questions. So we've actually done that, and we have brought that into a machine learning as well. We've brought in very trade segment specific features, and this is enabling us to look forward, be predictive, and create a cohort for trades for the informal customer segment. Thank you. This is just an example of how we capture income. So essentially, the value proposition that we bring has, a mobility on the field underwriting tool is complete understanding of the customer. And when I say complete, I mean, we understand is her demographics, her background, like I said, the specific trade segments, the expense patterns, the working cycles. And the reason that is important is because all of this leads us to understanding and assessing the income. One of the biggest challenges in the informal customer segment is that the income is self-reported. And typically, you always overstate income and you understate expenses. So we have to ensure that, when we are opening the gates for inclusion, we don't over leverage the customer as well, because that That's not good. That's not good for the portfolio for the lender. It's not good for our customer as well, because it leads to indebtedness. So that's what we do. Because of the understanding, we're able to right size the persona, right size the income. Now, once you have right sized the income, you convert that into a lending insight, and you actually right size and have a loan recommendation. Now, this is what really empowers lenders, helps lenders, and say, okay, this is a customer segment. You can lend $10,000, you can lend $25, $25,000 for, let's say, 10 years. It's completely up to the lender to choose that recommendation. The idea is, as and when the portfolio vintages and we look at delinquency later on, we come back together as a collective and say, okay, should we have restrained ourselves to the right profile recommendation, or we didn't restrain ourselves, but the portfolio is performing fabulously, which is then a learning for us at right profile that we need to change the risk posturing. But it really helps. And what we have done is, let me elaborate a little bit of this when I talk about advanced analytics, is when you look at traditional machine learning, and that's how we started as well, it's very tabular based. So it works on tabular data. Where we are moving to now is multi-dimensional data. So we're looking at, because we have a proprietary user interface, we're looking at how we can capture data from diverse sources. So text data, image data, and then convert that into insights, predictive, prescriptive, and actually help that, help lenders to lend to this customer segment, and help in the portfolio monitoring, portfolio performance, and just overall ensure that we are expanding access. And that's what Right Profile brings to the table. We work very closely with lenders. We've seen, a lot of times there's a lot of spend on a product, labeled as a technology product, but it doesn't go through because it's not integrated. We realize that lending Right Profile has to fit seamlessly into the lending infrastructure of the lender. For that, we do a lot of pre-work. There's a lot of priming. So we do a diagnostic in terms of digital maturity, acceptance, lending policies. You can have the best tool, but if the lending policy is not conducive to an entry, then it's just, the gateway is just too rigid for anybody to come in. So there's a lot of pre-work which is done as well. And essentially what we're saying is that here is a tool which we've created, which we're confident, puts the underserved customer at the center. And it is something we are dogmatic about, we are relentless about. We brought in a lot of features in the product in the pandemic as well. We realized that, we had to change a lot of things because the customer changed, the environment changed overnight. And unfortunately, a lot of the informal customer segment does not have the leisure of working from home. I mean, how does a plumber or a craftsman say, I work from home? He or she has to be at the place of the challenge, or where the pipes have broken down. So we're always changing the product. We're always speaking to the customer. We're always customizing for the location. The objective always remains the same, that we expand access, we increase efficiencies, and we make life easier, because lenders tell us they want to lend, but they find it difficult. The affordable housing customer says that we want to take a mortgage. We know we can pay, but we're not understood. So the objective is to create a bridge between both of them so that they understand each other. And what happens, because you have now collected data, which is in a digitized format, this data can be mined and can be used by stakeholders across. So it's not just lenders. At the lenders, of course, at a very granular portfolio level, but it can be used by stakeholders, it can be used by regulators, by central banks. What you will have is a complete digital, deep, granular understanding of your informal customer segment. And that can be used for lending policies, that can be used for creating subsidies. It just moves, like I said before, from anecdotal data to actual statistical interpretations and visualizations and optimization. And essentially, that's what we're trying to do, that just to be a part of the lending ecosystem to expand access to the affordable serving customers. Thank you. That was, I would like this to be far more interactive. So that's, the deck from our end. I leave it to the audience now and be more than happy to take questions. Thank you.
Thank you so much, Sumera, for that very interesting presentation. And now we'll have a session of questions and answers. So just to remind the participants that they can submit their questions on the chat and we'll read them out loud, or they can raise their hands and ask the question. And we have translation so we can translate it simultaneously. Maybe just to start, while we give a chance to the participants to ask their question, I'll ask one myself. So I think it would be good if you can tell us what have you learned about applying the right profile tool in different cities or countries, if you see different variability across these markets, and if this is something that right tool accounts for. Thank you.
Thanks. So, it's really interesting. So obviously every market, has uniqueness. So for example, in the South America or the Latin American market, you'd probably want a tool which, where the user interface is in Spanish or Portuguese. So you would have those cultural contexts, which, Right Profile customizes itself to. But what we have noticed is that one aspect which seems to address, so just to share with you, when we were in Kenya, when we were in Nairobi, one of the lenders looked at us and said, how is it that you're asking exactly the questions which are so relevant to the East African market? How would you know that? So that's really made us realize that, trade specific questions and understanding of the customer is really location agnostic, in the sense that you will have specific trades. So for example, Africa is known for selling smokies, which are sausages, roasted sausages. They have a lot of street vendors who sell that. So for example, in the Indian subcontinent, you don't really see sausage rolls as a street food. You'd see fried, potato crisps and things like that. So those are unique. And our understanding has been that when we spend time, understanding new nuances of the market, typically it's 20% customization to the product, 80%, we've realized fits, but we are also very keen to do that 20% customization. So it's completely aligned, with your customer segment, and there's ownership. You also feel it completely talks to you. But otherwise, the feedback has been that it resonates, it completely understands, because the objective is to distill that persona and convert it into a lending insight. And we should be able to do that accurately across geographies.
Hi, Sumita. Thank you so much. I see that we have a question in the Q&A box. This is from Daniel Gallegos Chavez. And he asks, do you have experience providing loans or credits to real estate developers or home builders?
Okay, so I'll answer that in two parts. One is we don't have a balance sheet, so we directly don't do loans. We are a technology platform which is licensed out to lenders. So lenders lend from their balance sheets using Right Profile as the proprietary tool. Having said that, Right Profile is used for individuals. We've built it for the individual, affordable housing customer. But what we do is we do encourage developers to use a smaller version of a product. It's called Right Profile Lite, has a pre-qualifier at, the affordable housing site, because we talk a lot with developers, and one of the feedback we get is, there's a lot of interest in the property. They come to us and they're completely unaware of the financial ability. And then when they go to the lender, they just don't get anything, so they drop off. So we always encourage that use, have a small version of the product, on your website or on your, at the place, at the site visit. So they get a quick understanding of how much they're eligible for, and then we can just put that into the lender management system. I hope that addresses his query.
Thank you. I also wanted to take an opportunity to ask a question while we wait for more people to type in the Q&A box. Could you tell us again, what are the different regions and countries that Right Profile is used in? So you mentioned that you're expanding into new regions, right?
Yeah, so we are, we've absolutely live. We work with top lenders in India. We've just started our foray into, the East African market. So we've been to Nairobi a couple of times. We were there for a month to completely understand the market. We've the Kenyan Mortgage Refinance Organization, which is the quasi-regulator, has sought a proposal for us. They have a national housing subsidy scheme called the Boma Yagnu. And we've sent out a proposal. They sought it from us to help right profile the affordable housing customers. And we met the Minister of Housing as well. So, East Africa, Kenya is the market we're very invested in. And I see us, there. We're already there, but I see us working very closely with them in the future. And we're just in the process of signing a memorandum of understanding with an organization called New Story, which will help us expand access into the Latin American market.
Thanks.
Thanks, Meta. I don't see questions on the chat box, so I'll ask the next one. What do you think it's the role of these type of text-based startups like Syntellect? What role can they play on financial education, and how can this financial education better support the goal of making housing more accessible and affordable for everybody?
So, coming back to what I said, one of the biggest impediments to housing is the lack of access to finance. And that's really because the existing tools and the legacy systems the lenders use are not curated for the affordable housing segment, which is why there's, you don't have lenders who are keen to lend. And the tool itself, Right Profile, our platform itself is self-learning. Once you go through the proprietary user phase, you go through the data points, you go through the unique trade segment features. It helps the lender team realize that what are the questions that you need to be asking the affordable housing customer to enable him or her to describe, her income patterns, to describe her expense patterns, and to avail of the loan. So that's there. That's at a granular level, but at a portfolio level, there are a lot of insights we bring in. So at a portfolio level, for example, we can tell you that, in Argentina, this is what an average customer looks like. This is the risk profile. And it's very granular. So for example, in Bombay, we have reached a point where we can tell you in a certain pin code, a tailor who's between 45 to 50, who has two, foot pedal machines and who's located in the market typically earns per month $300. So if you come back to me and you say that, this customer says he's earning $500, I would say this is an outlier. Talk to him, understand, and make sure he's not indebted. Vice versa, if you come back and you say that, I don't think he should be given a loan, we have data to show that no, typically, if this is his footfall, he's in this region, there is a market. So why should he not be given the loan? So that's the kind of granularity and learnings. And the feedback from lenders, resources, and team have been that they found Right Profile extremely easy to use. Also, what happens is in a traditional lending process, there's a lot of physical handoff. So, I create a file for you. It's a loan application. I hand it over to Annie. Annie physically goes through it and a huge heaps of paper. She gives it back to you saying that, hey, A is not there, B is not there, C is, go back and get all this information. Sometimes this entire handover to and fro can take 35, 40 days. I mean, the average turnaround time in India for an affordable housing loan some time ago was 35 days upwards. Now, imagine replicating that with now a product like Right Profile, where everything is digital, everything is uploaded, including customer photos, place of business. So all the questions you need to ask have been already asked and answered. So, you're already addressing efficiencies. And so much, and if you look at an average underwriter, an underwriter is a terminology I would use for a person from the lender's team who has vintage in credit assessment of customers. And an underwriter with typically 6 years of experience, which is a seasoned underwriter, on a day can typically do only 1.5 cases because it's tiring. it's very tiring. And in countries like India and Africa, the distances are very long. So for example, the micro entrepreneur doesn't work in the central business district or doesn't stay there, they stay far away. So the commute itself is fatiguing, it's long, it's expensive. And on top of that, if you take only half of the information because you don't know what to ask, and you come back to your office and your boss says, hey, you need to collect a whole lot more, your efficiency drops even further. Now, when you're powered with a digital intelligent tool, your efficiency is 3x or 4x at the bare minimum.
Thank you.
Oh, go ahead.
I'm sorry. I see we have a hand up from Andrea Sierra.
Andrea is now allowed to speak. Go ahead, Andrea. I'm sorry, Andrea. Go ahead again. Thank you. Andrea, you can unmute.
We also have a question on the chat box, so we can answer that while Andrea figures her mic. It says, can you discuss on the importance of data protection and privacy when planning for planning for and developing a massive solution like Right Profile?
That's a very pertinent question. It's very topical. So so there are two ways. One is because Right Profile is licensed to the lender, the explicit consent is the lender's. We work only on masked encrypted data. So at any point of time, Right Profile is not aware of who has taken the loan and from where he or she has taken the loan. They're just XX, so the code is just YY. The other thing we have brought in is that Right Profile is always deployed on the lender infrastructure. So the custodian of the customer data remains the lender or the organization we work with. It's never on our servers. We take advisory, we take permission, we take consent from the lender to work on the masked encrypted data. So we ensure that in terms of Personal Data Protection Acts, GDPR, we're completely covered. And we also speak to the lenders and tell them that explicit consent is yours, which is typically there in the application forms. Most application forms worldwide for loan applications have consent at the end where data is sourced. And we're not a mobile app. Since we're not an embedded app, we don't have a knockdown version where we pull unsolicited data from the customer. So it's an absolutely transparent clean product, and one shouldn't be worried.
Thank you. I don't know if Andrea, if you're still there and you want to unmute. Okay, I see also another question on the chat box from Jesus Jeskin. It says, what is the level of involvement of local governments in this tool? And if there's any experience in Latin America? They're writing for Peru and they want also to know your contact if possible.
Thank you. So it's always important when we are, to that extent, Right Profile is disruptive. So it's always important to collaborate, with stakeholders. So we, so for example, when we, let me give you the analogy of East Africa. So when we were in the Kenya Mortgage Refinance Company, they found a solution extremely exciting. They are convinced that Right Profile, can disrupt affordable housing for the citizens, and they in fact took it on themselves to forward this to the Ministry of Housing. When we were there, we were introduced to the personal secretary, which is their equivalent to the cabinet minister for housing, and we presented to him, we demoed to him. He said, okay, this looks perfect, send out the proposal. So it's important that we have the buy-in, but it's not necessary. For example, in the Indian context, we work with leading lenders, we work with them across the country, pan India, and we are a very big country. We have 28 states, 8 union territories. We've never the government has never been involved. The lenders have taken their calls on their own, saying that it's our book. So to answer the question, do you need regulatory approval? No. Having said that, it's great that you can work with stakeholders, because the idea is we are an impact organization. So the idea is we can work with stakeholders to expand access. We would love it, but you don't need the regulatory approval prima facie, because it comes across as it's a technology product, which is deployed on your infrastructure.
Thank you. I see we have a question from Victor as well. He says, thank you very much. Sounds like a very interesting instrument for housing finance. Housing finance lenders typically do not lend to customers with informal income. However, microfinance lenders actively lend to clients with informal incomes, including individual lending to these clients. So what do you see are the key differences between your instrument and the ones that are typically used by microfinance lenders for individual lending rather than group lending?
Thanks. That's a brilliant question. So, microfinance, for example, microfinance is very evolved. I know it's very evolved in South America as well. So the difference is that microfinance loans are very small. They're unsecured, and there is a lot of in Indian subcontinent. There's a lot of joint lending where you get a collective of 3-4 women together, and you say, okay, this is a joint loan, and each one guarantees the other. Whereas in mortgage, the loan tenures are much higher. If you look at a loan tenure for mortgage across the world, it's 84 months minimum. Loans, the maximum tenure is 180 to 240 months, but typically, if you look at it, it's around 84 to 120 months. So the reason why Right Profile was conceived for the affordable housing market initially, though the tool is really loan agnostic because it's the understanding of the customer, was that these are the most difficult loans because they are so long term. The credit assessment has to be very robust because the impact on the lender's book is very significant. Two, the impact of housing on a family is just tremendous. The multiplier effect we have seen when they move from a hutment to a own home, whether it's safety of children, whether it's hygiene, whether it's an entire approach, and the pride is just, it's very difficult to quantify, and it impacts all parts of their livelihood. So which is why when Right Profile was conceived, we said we will go with the larger product. And it helped that I come with 20 years of experience in mortgage. But we've now been getting a lot of requests from microfinance organizations in India. And I think we have a call tomorrow, Harshad, I think tomorrow with people in Africa for a leading microfinancer there as well. So the product is loan agnostic. But having said that, lenders find it very difficult to lend to the mortgage segment given the tenure of the loans and the size. Also, there are a lot of variables. There can be incremental housing, typically you build one roof, you build a washroom, it's self-construction. So, it's the intricacies are much higher, which is why you need a far more robust intelligence to address it.
I see we have, go ahead, Juliana.
I think we have another question on the chat box. And is on if you could tell us how the tool has evolved with time and maybe how do you see it going in the future?
So that's a question very close to my heart. So I don't come from a family of entrepreneurs. I'm a first-time entrepreneur, and before I founded Syntellect, I was working. So there were a lot of mistakes we made initially, and I think one of So let me reword that. There were a lot of learnings we had. So I think one of the biggest learnings we had was when we launched Right Profile initially. It's just 4.5 years ago. It was a standalone product in the sense that we said, this is Right Profile, and these could be your other lending systems, loan origination, loan management, and they won't talk to each other. And it just didn't work, because we realized, for lenders, it was just duplication of effort, because there were multiple points of entry and multiple points of exit. So the very challenge we wanted to address, one of bringing down inefficiencies, increasing productivity, was not happening, because we were adding, there was just another layer of platform. So we quickly pivoted. Today, Right Profile is flexible, it can be deployed. We have active application process interfaces, APIs. We can integrate with any third party legacy platform, and it's a very it's a very nimble young tech stack that we work on now. So that was one. Initially, when we launched Right Profile, we didn't have trade segmentation specific questions, because we were just testing the product as it is. In the last 2 years, that's an area we've focused a lot. So just to share with you, for example, the top 20 trades, we have specific questions for garages, beauty parlors, craftsmen, plumbers, dairy farmers, small fruit vendors, mom and pop stores. That's something we spend a lot of time doing. And, we're spending time now to understand the top 20 trades in East Africa, and we're building them, because they form the base of all the advanced analytics, machine learning, segmentation, optimization. So that's another change, we've brought in significant. We've also brought in, when we started, we were more automation. We've now brought in very strong layers of machine learning. Like I said, we have a very multimodal approach to machine learning. It's not just, tabular data. We look at diverse data sets, we convert. The other struggle which we had was, the founding team came with so much experience of mortgage, and we realized that the machine learning models were not capturing that. Also machine learning, there are various machine learning models, but one of them works only on historical data. Now, you don't have historical data for the affordable housing customer, because nobody's really captured it in a digitized format, or they've captured it, but there's no depth and volume. So which is why we had to find, very deep analytical neural models to convert their entire mortgage expertise into an optimization framework, and then convert it into scorecard. So we brought in all of that in the last 1.5 years, and we're continuously evolving. So, what do we plan to do next is, we plan to start bringing in the image recognition to a machine learning model. We plan to get predictive with default, and the list is really endless. It just, there's so much we do. But the one thing which has been constant from the time we conceived Right Profile is we're always in touch with the customer. So for example, even when we were in Africa, we made it a point to go and actually visit the end user. And we always do that. We always speak to the customer. In fact, even before we launch Right Profile with any organization in any geography, if we have, let's say, a 20-day diagnostic period, out of that almost 5 to 6 days, we ask to meet customers across trade segments in the space, because that's very important. And that hasn't changed at all.
Thanks very much. I see we have Habib Khan with their hand raised. If you'll just give us 1 moment to enable your microphone, and then you can ask your question. Please go ahead.
Okay, can you hear me okay?
Yeah, Habib,
Yes,
we can.
perfectly.
Okay, great. Now, Samira, it's great to see you again. You might remember me, but we've been trying to really leverage Syntellect in Pakistan. In India, we know you guys already. I'm actually a housing finance sector lead for IFC in Bangkok here for Asia Pacific. So it's really great to hear, the inroads that you've been making already in Africa and different other places going forward. One quick question, right, that I have, because we all know that India, right, is a very much advanced market in terms of low income, affordable housing with 105 or 107 housing finance companies, right? A lot of them in the affordable housing space. So it's a great market for you, right? For your product. Now, there are also many things that made India really successful, right? So far in the space of informal income underwriting with the HFCs. Some of them are really based on the regulations, right? So we know about the RERA, Real Estate Regulatory Authority, and also SARFAESI. So the absence of such regulations, right, in many of the other markets that we know, in emerging markets where we operate, how does that affect, right, I guess, the success rate or potential of your product, right? I mean, it's great to have the software and everything, but without having something like SARFAESI, has to do with foreclosure and out of court resolutions of foreclosure, etc., and the other type of regulations that India has, right, which made it very easy and much more. You really facilitated, right, lending to informal income and still have very low NPL levels below 2%, right, in many of these HFCs. So what are your thoughts around that, the lack of regulations?
And so, Habib, pleasure to meet again. So yes, very pertinent points. I would say that, the agenda for housing for all in India has been a major thrust from the central government. And I think that's something we've done very well. We have very targeted schemes. We have a subsidy. We have, a national rollout of an affordable housing program. And yes, SARFAESI is in place, RERA is in place. And these are milestones we've evolved over time. And yes, lending infrastructure is very important, so what you say is very relevant. You need to have an environment which is conducive. But having said that, you can still move. So I'll give you the example of HDFC. HDFC is one of the largest organizations in India, Housing Development Finance Corporation. It's really a case study in Harvard as well. And it's my first employer. So it's something, it's an institution I hold very closely to heart. HDFC was established in 1977. When there were absolutely no, there were no laws at all. There was no customer segmentation. There were no laws. There was no RERA. There was no foreclosure. There was no concept of recovery either. You typically, when you did a loan, if someone didn't pay, you just went and knocked at the door in 1978 and said, please pay. You need to pay. But HDFC in the last 45 years has been an exemplary study of how they've evolved with the market. And I always give that as an example for emerging economies, which are yet to develop, milestones and regulations, saying that start small, start with, expanding access at your levels, and we will get, the rest of the things in place. Otherwise, what happens is it's very chicken and egg. You have affordable housing developers who say they will develop, and then they say we've stopped developing because the properties are not being sold because there is no finance. So, it's just a circle. And one way out of the circle is to ensure that lenders start using, advanced analytics to start lending, and things fall into place. So, for example, to share with you, in Kenya, housing is in the Big Four agenda. And, they're also now thinking of how to get the entire policies in place. So we are aware that, governments across now are realizing that, over time, this is something they have to invest in. And we say that we'll start with you, at the point of conceptualization, and hopefully be with you once it's conceptualized and rolled out.
And that's fantastic, and really right on. You have to start somewhere, right? And I think the fact that KMRC in Kenya introduced you to the Ministry of Housing, I think is key. And I think in many of these countries, it would be important to include the ministries, right? Because then you can put on the table the importance of those reforms, right? Because to really scale up the space, it's important for them to go through those kind of reforms that India was very successful at doing more than a dozen years ago.
Yeah, it does. Having stakeholders involved, public-private participation is very critical. And it just helps, like you said, it just helps the entire ecosystem to leverage itself.
Absolutely. Thank you.
Thank you. I think we have one last question on the chat from Alvaro, and he asks, have you seen large differences in payment capacity between conventional borrowers at commercial banks versus lower income, informal income borrowers or microcredit?
So, so if you look at microfinance, in terms of if you're looking at that loan segment, historically defaults have been higher. I would not take the last 2 years as an indication, because last 2 years worldwide, businesses and individuals have been tremendously stressed and put under pressure, especially the informal customer segment. But our observation in India, and the reason I quote India is because there's been a significant amount of work done and lent, unlike other economies, is that while the book does have a slightly higher rate of default than formal lending, it's still very much under control. It's still profitable and very much under control.
Thank you.
I don't see any more questions right now in the Q&A or in the chat. Well, there's one in the chat asking, could you share contact information for Syntellect? It sounds like there's a lot of interest among the participants to learn more. So we can share that information, or if you want to put it in the chat.
We'll share that information. We'd love, to speak to all of you. And please do reach out to us.
So Sumita, maybe before we close, are there any maybe parting thoughts, lessons learned, or visions of the future that you'd like to share with the participants about Right Profile or Syntellect, or where you see the housing finance sector going?
I would just like to say that, I'm really optimistic. I see, a very bright, very inclusive future. I feel very passionately about, this customer segment, because like I said before, it's one thing to, make database statements saying that, affordable housing contributes to 16 out of 17 sustainable development goals, which it does. But when you actually see on the ground, when a person who drives a small, three-wheeler who ferries people to and through actually moves into his own apartment, the pride that you see, the ownership, and you see it in the levels of education of the children. You see it especially in the girl child. She's not in a hutment anymore, running on the streets. It's safe, and you just see the entire demographic of the family change for the better. So it's just something we are so passionate about, and we are confident that if together as a collective, stakeholders and organizations like ours work together, we can truly expand access. We just need to be at it. We need to, we need to involve. We always have to make sure that the affordable housing customer is central to all our discussions, but it's definitely doable. And, I see that as a very inclusive future for all of us going ahead.
Thank you so much, Sumeda. I think it's great to hear that there's optimism, and we really look forward to see how this tool continues to grow, not only in India but also in other regions. Yeah, so thank you very much for everyone for participating, for the questions. I think it was a great discussion. And we'll post the recording on our YouTube channel for everybody that could not attend to the event to see it online. So thank you very much. It was a pleasure to have you.
And please do feel free to share my email for whoever wants to reach out to us. We'll get back to them.
Will do. Thank you so much.
Thank you for joining us. It was a pleasure.
Good to see you. Bye.
Gracias nuevamente por su participación. No olviden registrarse para todas las actividades del programa en el enlace que dejamos en el chat y compartir con sus colegas. ¡Feliz día!